Okay, let's talk a little bit about some of the expenses that you can find in mutual funds. Now, the first thing we'll look at is this fund a no-load fund or a load fund? We have a whole lesson on that, so make sure you look at that lesson. But it's basically a charge that you have right up front, or not, depending on the fund. So look at that lesson on load and no-load funds. But these charges up front, if it's a load fund or a sales charge fund, it could be 3% or more that you're paying right off the get-go just to invest in the fund. So look at that lesson on load and no-load to learn more detail. But this is a charge that can be expense right off the beginning. It could be a front-end load, which is a beginning charge, or a back-end load that you've held for some time, and now when you sell the stock or you sell the mutual fund, that's when you incur the load or incur that charge at that end. But it's a one-time fee is a way to think of it. Then there's the annual fees, which is wrapped up into expense ratios. That's one of the key numbers you want to look at is what is the expense ratio? It's a percentage of the assets that you have in the fund. So you're paying a percentage of your overall holdings, the dollar amount or whatever the denomination of the amount of the holdings that you have. You're paying that on a yearly basis as a percentage. Typically it's like around 1%, and it's really related to operating expenses and operating the fund and the fund management around the fund. So look at operating expenses. Now, in addition to that, usually it's wrapped into that operating expense number, but if not, sometimes they also have 12B1 or marketing type fees. So take a look if the fund happens to have any type of fees that are beyond the expense ratio. Sometimes these 12B1 fees are 0.25%. And so you can kind of weigh that in your overall expenses. Also, what might not be in the expense ratio might be additional miscellaneous charges, custodial fees or some other types of fees. And we're going to show some examples so you can see some of these examples of these different fees. But to give you an idea, this might be something that's outside your expense ratio too. So look closely at the prospectus, look closely at information around fees so you can see what's in and what's outside this expense ratio so you know what you're investing in. In addition, could be redemption fees. And those typically might be 1%. They can really vary. But there's a redemption fee if you sell your mutual fund before a certain time period. You know, maybe it's a year or 90 days, whatever it might be. If you sell before that time period, the fund is going to charge you a 1% fee or charge you a redemption fee. The idea behind that is to discourage market timing, discourage people who buy a fund and then get out in and out all the time, you know, especially for certain types of funds. And I got an example. We'll take a look at that right now so you can see some of these different examples, including the redemption fee. Okay, so let's take a look at a couple funds, and we'll look at one from Fidelity and one from Vanguard. Always a reminder when I'm showing funds that I'm not recommending any funds, I'm just using it for illustrative purposes. So if we look at this fund, this is the Fidelity Small Cap Growth Fund. It's made up of small companies. It's a stock fund, and the idea is that you're going to buy these small companies and it's going to grow, and this fund provides that as far as focusing on small cap growing companies. Now, if we look at just this initial thing on the Fidelity website, you can see it says no transaction fee here. That's another way of them saying that there's no load or no sales charge for this fee. So this is a no-load fund, which is great. So you're not paying any extra money just to buy into the fund. So it's a no transaction, no load fee fund. So let's go take a look here now on this under fees and distributions and see what we see. All right, so for expense ratio is right here at 0.92. So we'll be paying 0.92% on our fund on an annual basis to own this fund. There are no 12B1 or extra service fees, so you can see that here. There is a short-term redemption fee or a redemption fee of 1.5%, and that's related to 90 days. So if I sell before my 90 days, I'm going to get charged 1.5%. And the whole idea of that, especially with small type stocks, is they want people going in and out of the fund. They want you to hold that fund for at least 90 days. Sometimes you'll see that even be longer, like a year. But this isn't a summary of the expenses, but if I want to find more detail, I can look at the prospectus, and that's right here for more information on fees. So let's pull up the prospectus and take a look at that so you get a feel on how that looks too. Now, prospectuses can have all sorts of information. Here's a summary prospectus. You can click here to get the full prospectus, but we want to look at just a summary of the fees here a little bit. And this is for that, once again, the Fidelity Small Cap Growth Fund. Up here it is right here, the fee table. So we can see our redemption fee, 90 days as a percent, that's 1.5%. This is our operating expense. Our overall annual operating expense was that 0.92 we saw in the previous window there. We saw the 0.92. You can see that's broken down by management fees. You know, basically what it needs to manage the performance or manage the fund is 0.65. That number can always change if the market goes up or go down. They feel they can charge more or charge less. I know during the Great Recession and afterwards, when a lot of people were getting knocked around and people are divesting on the market, especially stock funds, they lowered their fees as a way to entice investors to kind of come back, and then they raised them later. And then under here, other expenses is a 0.27. So you add that 0.65, 0.27, that's your 0.92. So, and no 12B1 fee. So you can see what your numbers are made of your expense ratio. If you really want to, dive deep into that and get a breakdown, you can find that prospectus. So if I was to buy this fund, I would know I'd be paying on an annual basis 0.92, and I'd really need to be wary and make sure I was not going to sell this within 90 days, because otherwise I'm going to get hit for that 1.5%. So this is, very much at least 90 days, if not longer, type of investment. Let's look at another fund here. Let's look at the Vanguard S&P 500 fund, another big, large fund. So to give you some ideas, once again, there's thousands of mutual funds out there, so you want to look at each one. But this is the Vanguard 500 Index Fund, very well-known fund that tracks the S&P 500 fund. And we're going to go the same thing here. We'll take a look at fees and minimums over here. We'll look at fees. And the 500 index fund, that's got a real low expense ratio. You can see that was a 0.17 versus our Vanguard that was over 0.9. And Vanguard really promotes that. You can see they put little things in here about how much you save by saving on fees. They say the average here for similar or large cap funds versus that Fidelity small cap, but large cap funds is 1%. So, hey, look at all that money you'll save on fees on an annual basis. So that's something that they really promote. So, okay, all right, it's got a low expense ratio. Let's find out more information. Is there any other fees? That's just the expense ratio. Is there a purchase fee or a sales charge or a load? And in this particular fund, there's not. See where it says purchase fee, none. Redemption fee, none. Remember that Fidelity had a 0.5% for 90 days. Here, no redemption fee, no 12B1 fee, overall expense ratio 0.17. Hey, that's pretty good. All that's good so far. There is an account service fee. So there's some things that are not in the expense ratio. So for these certain types of non-retirement accounts or certain retirement accounts, they explain what there might be additional charges. And here it says, we charge a $20 annual account service fee for Vanguard funds or for this fund with a balance of less than $10,000 in the account. So if I got $10,000, if I got less than $10,000, I'm going to be paying $20 a year just to have this fund. And if I've only got, let's say, $1,000 invested, that's a bigger number now. So understand $20 a year for anything less than $10,000. Now they do have an out for you. It says this fee does not apply if you sign up for account access on Vanguard.com and choose electronic delivery of statements. So this is a way to they're trying to encourage you not to get paper statements, to get them sent to you electronically. And if you do that, they're going to waive this $20 fee for you. So that's kind of a way that they're trying to get you to invest in a certain way. But if you like your paper statements and you got less than $10,000, well, you're going to be paying $20 a year. So it's good to investigate these funds, because if you look at just the top part here, where it's like, it's an expense ratio of 0.17. I like that. That's really good. That's pretty low. You might not be aware that if there was a sales charge or some of these additional fees here, let's say an account service fee. Same thing with that, with the Fidelity fund, right? You might look just at the expense ratio and say 0.92. That's below the average. I want to be under 1%. That's okay. Small cap fund. I like that. And if you buy it and you say 60 days later you sell it, oh my gosh, now all of a sudden you may not realize that you're going to get hit with this 1.5% additional fee there. So the idea behind all these fees is to be aware of what your fees are and what you're paying and how it works. And the way you do that is you get into the prospectus, you look at some of these things, at least on their websites, but when you get in the prospectus and go under fees, that's where you'll find the real detailed information and be able to make some smart choices on that. So when you're investing, fees are a part of it. They might not be the only determiner. You want to look at performance, you want to look at management tenure, you want to look at how it fits in your portfolio. There's a lot of things to look at beyond fees, but fees is very important to look at too as well, because it's not what you make, it's what you keep.